Today we're going to use an area on Money Guide Pro that I personally use most frequently when I look at my own accounts online. Starting again at the My Plans menu, as you'll see up here, is always the go-to place to get back to the main area. On the lower left is an area that says My Snapshot, and I'll click on My Snapshot. I like it because you can get just about everything you could ever want right here in this one area. Starts off with a very quick look at my net worth, and that's not my net worth. It's a sample client, of course. But it shows investment assets, liabilities, net worth. It also shows a quick confidence zone as to how you're doing on your plan. From here, you can click on the details. I usually go to average returns. You can look at either, the two areas I look at here are, number one, by goal or by combined details. By goal allows you to choose one of your financial plan goals and look at the confidence level of that being met. For combined details, which is your entire plan, you'll see, number one, a picture of the financial plan with the assets growing over time, and then generally at retirement the assets coming down a little bit. You'll see here in this picture a combination of your age on the far left and the year, along with your assets. Earmarked assets are ones that are tied to a specific goal, such as college funds being used for a child's college education, or fund all goals, which, as you might guess, would fund anything that's on the list of your goals. We have both, in the blue we have the needs. Your goals are ranked by most important, goal being 10, down to the least important goal being a 1. In this case, we have 3 needs, being the 2 college goals and the retirement goal. And then the wants, we have retirement travel and retirement fund money. The plan goes down and it shows on the left-hand side the new money that's going in under addition to assets, which is right here, addition to assets, along with the money you already had saved up. It has a rate of return on that money already input into the system. Post-retirement income is Social Security. If you had a pension, that would be included there as well. Investment earnings is multiplying your account balances by a fixed rate of return. Taxes are also considered, and then it shows the money here from the goals being taken out of your plan, and then the year-end value here on the right. And as you go down, you'll see what happens now. Some of these costs are inflated, like the college costs going up every year. For the retirement fund money and travel, we just use a fixed number here. You can use inflation, or you can take it away and use no inflation. As you can see in this plan, the account balance overall is going down a little bit over time, so it's a little bit of a risky plan to think this is going to work out. But even to the wife's age 100, there's still quite a bit of money left in the plan. So there is a pretty good probability of success here in this plan as is. Going back to the snapshot main area again, something else I like to use is something called the what are you afraid of area. And this is a quick way to see how strong your plan is if our assumptions need to be changed. For example, while this shows needs and wants, we have a 99% probability of success. What happens if I'm afraid of inflation going, say, from 3% and I move the cursor to 4%? This gives me a real quick calculation of, does it really make an impact or not? And I guess at that point, we're still 99% confident. What happens if we go to 5%? Still, oh, I'm sorry, 4.5%. What happens if we go to 5%? Now remember, it wasn't that long ago, back in the 80s, that we had double-digit inflation. At 5%, we're still okay. That's good to know. What happens if my Social Security benefits are cut? And maybe they're not cut, but maybe I'm taxed on them more than I had planned on being. So you can include that. You can say, what happens if my returns are less than expected? So by moving this, you can play with these different numbers, and all of a sudden, if my returns are down along with these other factors, my plan success ratio changes. So you can play with these numbers as much as you'd like. You can also put in the healthcare number if you want to factor in long-term care. If you want to factor in that you may need money for long-term care and for how many years, you can put that in as well. Again, this is something that you can play with on the fly, along with the what if section on the financial planning as well that we looked at earlier. Under resources, this is another area that I spend a little bit of time looking at. After I click resources, I go to net worth. And in the net worth area, this is my quick down and dirty net worth that I like to look at for my own self. It shows that same graphic illustration, but then when you hover over the different areas, it shows how much you have in each investment, or down here in different liabilities and what they are. If you want more specific information, you can press the detail button, and it reminds you of exactly what is in each account. Under allocation comparison, this gives you a quick down and dirty of how your money is allocated as a percentage over here on the right. I find that very interesting. And then on the top up here, your current portfolio, it shows that if, based on your asset allocation, which in this case is 65% in stocks, what the projected rate of return is, in this case 7.3%. How would this portfolio, based on the allocation, have done back during the Great Recession from several years ago? And this portfolio would have lost 27%. So while the stock market may have lost between 40 and 50 because you're not all in the stock market, it didn't lose as much as the whole market itself. If you click on more here, it also shows the real rate of return that's after inflation, and the standard deviation, which is how volatile the portfolio is. So that's my analysis of how to use the snapshot feature on Money Guide Pro. To get back to home base, always hit return to my plans, and it takes you back to the starting point. Hope you find that very helpful. Thanks for listening, and have a great day. Let us know if you have any questions at all about this. We'd be happy to help you.